Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Friday, the last trading session of the week. We're coming to you as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Good morning, guys.
Hi, morning. How are you feeling about Friday?
Oh, always good.
Always the best feeling. I thought that next week was the truncated week, but then I realized it's the following week. So my enthusiasm got dampened a little bit.
Came off a little bit. But, well, it is a Friday, so let's kickstart things with a quick run-through of what you need to know as we begin another trading session. I mean, it's been tough. For the last 4-5 trading sessions, I mean, the market's been down and out. Although yesterday there were some signs of life. I'll come to that in just a bit. But let's pick up from where US markets have handed off the cues to us. So the Nasdaq was up about 0.75%. And the S&P ended mildly higher as well. There was Nvidia, which reported results, and there was a big rub-off impact in the US tech sector. And I think general level of enthusiasm. I looked at the Nvidia broad numbers. Is just a P multiple upgrade. Actual earnings have not been upgraded for the company, but people are now assigning a higher P multiple because of the AI opportunity which Nvidia seems to poise to harness. But that was one name. You had other earnings as well from the tech space. Numbers have not been all that bad. I mean, I'm talking about the last overnight session. In terms of price action, you had equities, as I said, which ended higher. The 10-year sold off about 4 basis points. This is the US 10-year. It ended at about 3.88%. The US 2-year, by the way, was absolutely flat. But the 10-year came off, the 5-year was down, and the 30-year was lower as well. So across majority of the yield curve was lower. The dollar index, that is, hit a high of 104.8. And then it came down quite sharply to about 104.51. Now, this gives hope. Actually, but one should not go read maybe too much into it at this stage because just like last Friday, if you remember, we had a big reversal from the highs for the US 10-year and the dollar index, but that did not help from both those things pushing higher for the majority of this week. We need more. We need more price action saying, well, things are cooling off. In any case, the dollar index remains quite far away from levels needed to fructify into a bullish outside month, which is a very powerful signal. I mean, if that were to materialize, I mean, you're basically looking at much higher levels on the dollar, which is not the case. The Nifty ended lower, but we ended about 100 points off the intraday low yesterday. That's the close, 17,511. The budget day low is still not very far away. I mean, at the low point yesterday, the Nifty was about 100 points from the low, from the budget day low, 17,353, and I think that must hold in case of more downsides. The Bank Nifty ended up by 5 points. So it was a positive daily close, which is good. The banks, of course, have been a much weaker part of the market as compared to the Nifty. The Bank Nifty ended 300 points off the low as well. Yesterday's low on the Bank Nifty was 39,600, and I think that must hold in case of more selling, more downside. So you've got clear markers, the budget day low on the Nifty and 39,600, which is the low on the Bank Nifty from yesterday. I said this yesterday morning as well, that nothing happens in a linear, straight-up fashion. The market sold off on the Nifty some 600, 650 points in 5 sessions, about 1,400 points on the Bank Nifty in 5 sessions. So, market will test for how strong the bounces are. But I think, if you're trading, you let the market tell you, both on the Nifty, the Bank Nifty, etc., you let the market tell you that it wants to base out. And that is a process. That is not a one-day price action thing. You could look for action in specific stocks, and there is enough happening. We can talk more about that. But on the indices, you want the market to tell you that it's in the mood to give you a little bit more of sustainable bounces and not bounces which get sold off very aggressively like the ones we've had. Guys, hi.
Absolutely, hi. And there's not been a clean stretch so far, right? It's been very volatile the last few days, ups and downs, intraday sell-offs. And that makes it a bit tougher for, I guess, taking a clear trade or a clear directional trade for the market, and that's the big problem really. Of course, by the end of the week, it's been 5 straight days of losses now. that the market has seen. And if you look at the Feb series, it was a very weak series, not just for the index, but for the Bank Nifty. I mean, the Bank Nifty is now down about 4% in the Feb series itself. It's the biggest fall that we've seen since June of last year. So that continues to be the big problem pocket for the market. Yesterday as well, there was an attempt to recover, but not a convincing attempt from the Bank Nifty. The good part today is that the global handover is strong. So the Dow was up in the green yesterday, but lots of macro data comes out later in the evening. So my guess is that people may not want to take a bullish call based on the global data, because there's personal income data, there's consumer spending that comes out later in the evening. If that data is weak, then it could drag down global markets because, you know, that piece has not worked very well. For our own markets as well, the Nifty, although it has been holding around the 17,500 mark, the 200 DMA is something that could be tested. That's what experts have been suggesting in the last few days. So the downside is still very real. And if you look at it, FIs have been selling quite a bit. So once again, the numbers have gone up. Yesterday, FIs sold about 1,400 crores. Put together in February so far, it is about a 3,000 crore sell figure that FIs have seen, a little over that. So the bias is definitely on the downside. Even if bounces come, they get sold into. They are not very durable rallies or pullbacks, and that seems to be the problem pocket for the market. So let's see how it goes today.
Well, that's right, Sonia. You know, this market is prone to selling, and a fresh breakout will come only once we get past the 17,850 to around 18,000 odd. But I'll tell you what, when everything else fails, then turn your attention to history. And history suggests that in the last 20 years, Nifty has never had 4 straight negative months. You know, I went through the data, and this is a derivation. I think in 2001 odd, that was when we had 4 negative months, but otherwise it's never ever happened. So the bulls, they are banking on either history or hoping for a late pullback in the next couple of days. You have a couple of sessions left in February, so they're hoping maybe we don't see, 3 negative months itself. And just pull up the data points. You know, December was a bit of a down month, January, and now we're bracing for a February down month. March, what does it hold? So either you don't want to see 3 negative months, or then you're banking on that we see 3 negative months and we see a bit of a pullback. And it's happened twice in the past. That's a recent past. In 2022, well, we had highlighted this even at that point of time, that we did see 3 negative months, and July was spectacular. You know, if you go back to 2020 as well, that's from the COVID lows, you had 3 negative months, and then you had a good pullback. So when all else fails, turn your attention to history and hope that the bulls have something to cheer about. At the start of the series, well, the FI is a net short, and I always say that's not such a bad thing. And you're hoping at some point of time, maybe when the short positions get around 82, 83%, which we've seen in the recent past, we do get a bit of a bounce. For the time being, they're building on their shorts, and the shorts are at around 81% odd. On the call side, there was aggressive call writing. 17,500, 17,600 calls. Add that together, more than 60 lakh shares were added out there, and there was aggressive writing being seen at those levels, which brings us to the levels that you should be tracking. Yesterday, we got to around 17,620 and we got some selling, but going by the options data, in the vicinity of around 17,650, you're expecting some selling to come about. So 17,650 to 17,700, the near term, the bears would want to defend that. On the downside, yesterday we bounced off the 17,450 odd mark. So maybe if we get to that level, maybe in fact, you see a bit of a bounce on them. And you don't want to see the February 1st lows, but that's up for you on the screen. And that coincides with the 200 DMA as well. The SGX Nifty suggesting a gap up. It won't be a one-way ride. So expect some bit of volatility, but I'm counting on that data point. Never seen 4 straight negative months. Hopefully we don't see that.
Oh, absolutely. And you know, the thing is with the banks, right? I mean, we were talking about how the Nifty Bank has sold off. This year, the Nifty PSU Bank Index is down 16% so far.
And it was a star last year.
It was a star last year. So, I mean, how the night changes. That's that song, right? So it's pretty much changed overnight for the PSU banks. But anyway, lots to track this morning. The Asian markets, by the way, are under a lot of pressure. Hang Seng is down almost 300 points. So let's get straight to some views for the day. We have Alexander Redmond of CLSA who says a correction in US equities is no surprise to them, as their year-end S&P 500 target of 4,000 is among the most bearish on the street, as they uphold that there is unfinished business for the US rate expectations, earning revisions, lead indicator erosion and unsettling geopolitics. He says their emerging market Goldilocks thesis for 2023 has not stalled. It has merely entered an air pocket in momentum. I like that.
All right, we'll get you some money market views as well. Bhaskar Panda of HDFC Bank says that the dollar index remained elevated as market participants continue to mull over a higher for longer rate cycle in the US, he says. Meanwhile, geopolitical concerns remain as Russia carries on its war with Ukraine. He adds Asia ex-Japan remains under pressure as a mild risk-off sentiment prevails. Given this backdrop, he expects the dollar-INR pair to trade in a range of between 82.6 to 82.8 to a dollar. For the day, he says, the RBI MPC minutes were on expected lines.
All right, and on the bonds, Bhaskar Panda says there was also some profit-taking by bond dealers in India. Generally, he expects the 10-year benchmark bond yield to trade in a range of 7.35 to 7.40% for now.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Axis Bank, Jindal Stainless, as well as Jindal Hisar, Precall, Alchem Laboratories, Sanofi India, SpiceJet, KSB, and Zomato. All the stocks on the back of positive news flow, while Z Entertainment could yet again open up in the red.
All right, what we'll do is we'll take our quick first commercial break with